Everybody, it's Brian Shannon from alphatrends.net. Today is Wednesday, the 15th of June, and we had the Federal Reserve meet. They raised interest rates by 75 basis points today. And if that gave you any clarity to a bottom here in the market, you're looking at something different than I am. What I see is a giant mess here. We're looking at a 15-minute time frame. In each one of these candles, it represents 15 minutes of data. And the most important thing I look at on this type of time frame is what I always talk about is the 5-day moving average and the direction of that. That's that orange line. When we're below a declining 5-day moving average, I consider the market guilty till proven innocent. And if you're going to trade the long side, it should be for shorter term trades. Basically, that means day trades. Here's where we are intraday. Today's volume weighted average price, we closed above. That's one positive. It's a very small positive. Here's the volume weighted average price from the Fed. We also closed above that. So that's another very small positive. It typically takes a couple days for the market to digest the Federal Reserve meeting, so you can't read too much into the first day. If we back it up to the daily time frame, we know, of course, that we are at an important level that we tested on Tuesday of this week, just yesterday that is, and that is the volume weighted average price from the 2020 high. That's a level that we've been looking at for a while, and it doesn't mean the market will bounce there. So far, we're seeing a little bit of stability, but like the last time we touched the COVID low, COVID VWAP rather, we did get a nice bounce from it, but that bounce failed. And that's the most important thing to remember. We're also below declining 20, 50, and 200-day moving average. When we look at the weekly time frame, that means, of course, we're below the 20-week, 30-week, and 40-week moving average as well. So we're still in a bearish trend. We're showing very small signs of stability, if you want to look at it that way, in terms of we finally closed above the week to date volume weighted average price. That's that blue line. We closed above the volume weighted average price from the low that it made on Tuesday. When we look at a 1-minute chart, here's our volume weighted average price from the Fed. Let's just change that to red just so we can differentiate it between today's volume weighted average price. So we closed above today's VWAP. We closed above the VWAP from the Fed so far, but again, it takes a couple days typically to digest those gains and the move that is from the Fed, and we are in a primary downtrend. So I remain highly skeptical. I had put on Twitter a potential scenario that sometimes occurs. That is, when we have a downtrend, what we'll see sometimes is the market closes above the 5-day moving average. So this chart right here represents each one of these vertical lines represents a day. So after that downtrend, we saw a gap higher. And this circled area is over here. What we would be looking for is if we're above the 5-day moving average, which we didn't close above today, then, perhaps tomorrow we get a gap up. If it gaps up, don't buy it right away. But if it pulls back and then gets back above the volume weighted average price for the morning, and, earlier you are in the day, you'd have to look at a 1-minute chart. If you're, let's say at noon Eastern, then maybe you could be looking at a 5-minute time frame. It's a shorter term strategy for sure, but sometimes it can get you in right at the moment when the market does reverse. I'm not calling for this. It's simply a potential scenario to be aware of. It's something that I've seen occur, on several occasions in the past, and I've traded successfully. So, again, there's nothing really to be excited about, though. We still have all the problems that we had. The Fed didn't fix anything by raising rates. So it's very difficult to look at this market and say, hey, I want to be bullish and I think that it's going to rally. Someone asked me, do I think this is going to lead to a multi-week rally? I have no idea. So far, the evidence doesn't suggest it. We're, again, still below the declining 5-day moving average. We're below the volume weighted average price from the CPI. That's this one right here. So last Friday when the CPI came out, that's where I anchored a volume weighted average price. So people always say, where do you anchor from? Well, I anchor from important events like that. I anchor from the beginning of the week, from an important low, from an important event that brings a lot of volatility to the market. The Federal Reserve, yes, it's relevant on a 1 and 2-minute time frame as well. Over to the Nasdaq, we are, back up to this volume weighted average price from the 2018 low after touching the volume weighted average price from the 2018 high. These are just stopping points. when you look at it just by itself, what you see is lower highs and lower lows. If you look at just simple moving averages, the 20-day moving average is declining. The 50 is declining. The 200-day is declining. This means big money is moving out of the market. There is a process of the decline, then there's the accumulation. V market bottoms occur when we have the Fed working for us. We have the Fed working against the market. We're not likely to see a quick recovery to this market. What we're likely to see is occasional strong bounces, as we've seen, and they can be quite powerful and suck you in and lure you into thinking that the bottom is in. But the path of least resistance remains lower. The Russell 2000 continues to bounce along this prior band of resistance here, is trying to hold a support. But again, some people will call this a double bottom. Don't listen to them. They're the same people that called this a double bottom. They're the same people that called this a double bottom as it bounced one day. This is not a double bottom. It would only be a double bottom if it was to get above this level. That's when you identify a double bottom. Look it up, Google it. Don't just listen to people, uninformed people, repeating things that they've heard that aren't true on Twitter or wherever you get your financial information. The 5-day moving average continues to decline here. The volume weighted average price from the CPI, let's just put that back on there so it stays on all of them. We close below as well. We're above the week to date VWAP, so maybe we're just neutralizing. It doesn't have to be all big reversal at once. Sometimes it's a process that takes time. Semiconductors, they closed above the volume weighted average price from the CPI, and they often lead the market. So that's somewhat, more neutral here. But again, with that declining 5-day moving average bearing down on it, and in that 5-day moving average calculation, tomorrow we get rid of this information. That was 5 days ago. So that means as long as we're below the lowest point here on this day, we're going to continue to see that 5-day moving average will decline like this, even if the market rallies all the way up to here. So then what we would see is maybe something along the lines of this. Again, not calling for it, but just be aware these markets typically don't turn on a dime. The biotech stocks, again, this group has been the poster child for the worst group there is all year. Again, people will tell you this is a double bottom, just like they said this was a double bottom and that was a double bottom, etc. It's just an area where buyers have shown up. We got oversold, and what happens when we get oversold? We often undercut the prior low, take out the stops, suck in new short sellers who are uninformed, and then we get a little bit of a bounce before the next leg lower. That's what's most typical. It's not what happens every time, but it's what's most typical. And the path of least resistance on all these time frames is lower with a declining 5-day moving average. I guess you could say on the 2-minute time frame, the path of least resistance is higher and fine. But that's for day traders. Financial stocks have been crushed here also. They are down to the volume weighted average price from the 2020 high and this prior band of resistance. It's possible we see a bounce in here, but is there any evidence that the buyers are gaining control? Again, the volume weighted average price week to date is right here. The volume weighted average price from the CPI right here. The 5-day moving average declining. The evidence simply is not there for a turn. There is evidence that we're seeing at least some, more vigorous profit taking in the energy names, and we can see we're down to the 50-day moving average again. The direction of the 50-day moving average is higher, so it doesn't mean short it, but again, have your stops known. Keep an eye on the trend lines. Keep an eye on the volume-weighted average price level from that last move. We're right there as well. So this is a level of potential support. It's a rising 50-day moving average. It's a VWAP from the prior low, and it's this prior little resistance in here. Does it mean it's a buy? No, not while it's below the declining 5-day moving average. Play a strong defense. That's the message of the market.